Okay, let's talk the stock market. We're looking for trade ideas, going to use the charts to be our guide. Feel free to join up in the private member group. I've been posting a lot of trade ideas in there recently. When volatility picks up, which is what we have now, that's when I am able to really actively be posting trade ideas in the private member group. I can't keep up with those trades on these public videos. It takes too long to record it and get it out there. Link in the description below on that. Triple Qs, we've got, we have, good size, a good size sell. And I don't see any signs as of right now that it's over. I think we're probably heading down. Honestly, we had this big candle right here, this big breakdown candle. We're back down within that range of that candle. So I don't think we're going to find any kind of bottom until we hit that like 589.63 area right there. That looks like pretty good support on the daily chart. You've got several reactions, at least two, and there's a gap right there. So that's kind of where I think we probably start to see a little bit of support, but I don't see any signs of any support until then, really. Maybe a little bit of support right here. You can see lots of candles right in there at about 596-ish, but I don't know if that's going to hold. Pretty impulsive selling so far. And again, on the daily chart, big negative divergence. It really just, the bigger picture, if you want to roll out and look at the weekly chart, this is where you have to kind of decide what you want to do from a long-term perspective, because I can point out the little micro levels where I think we'll get a bounce on the daily. But you can see here's the weekly chart, and you've got an uptrend. You have negative divergence building on the weekly chart, all right? Then you broke trend here, and you back tested. There's a back test. And so far, you can see on the weekly, we have a clear bearish engulfing candle on the weekly. That's likely not going to get taken out. That to me looks like the real deal. For that to get taken out, you would have, at least this week, you would have to have a monster rally today, and it would basically have to rally up about 4% in the triple Qs. Very, very unlikely. So that means we're going to close the week with another bearish engulfing candle, which is what we had here previously a couple weeks back. We had a bearish engulfing with no follow through, and they negated that one by ramping it up. Now, yeah, they could do that again, but again, we'll just take the charts for the signals that we see, and if those get negated, we'll act accordingly. As of right now, this is a big sell signal, so it is a topping candlestick. It's signaling the top of the market. This one's even better than the former bearish engulfing because you actually are really getting that back test of the trend line as well. And my trend line might be off just slightly, but in general, close enough. Well, where we're getting that back test and rejection. We're here. We had a little ways to go up to that trend line. So that is it on the long-term time frame. It's telling me that this trend that we've been in is done, and we are going to essentially trend lower, start to move down to the, take out some of these lows. This is a weekly chart, so it's kind of months basically to maybe even years, but telling me we're going to head down, take out the lows, make a new low before you see a sustainable rally. So again, that's the weekly chart. It's going to take time, and we can flip back to the daily. But as you can see, I don't see any support really. So I think we can hold at this 589 area, get a little bounce there, but I do believe there will be more selling to follow after that bounce. You can see here the VIX starting to wake up. Again, we had kind of a spike, then we pulled off, and we're starting to wake up again. So VIX is actually trending higher. If you really look at kind of the short term, we have an uptrend in the VIX. Higher VIX means pretty much lower stocks. So VIX is starting to wake up, and this thing, it can easily just spike a lot higher. So we'll continue to watch that. I am positioned in the VIXY along with my shorts. Here's VIXY. You can see here it's up 4.5% today. starting to rally. I do think we're heading up. The former highs are right, let me kind of back that off just a little bit. Trend line right there, about 39.79. And then you've got the 200-day moving averages on this one up here around 43.70. That's my target because we've already hit that level there. I think we should go right through that. Probably a 1-day reaction on that level and then right through it to the next level of resistance. So again, VIX starting to wake up. One of the major reasons the VIX is starting to wake up, at least as of today, we'll see how we close the week, but here is the Semiconductor ETF, SOXX. And you can see that we've had a break of trendline support. So this is coming off the April 2025 lows, basically when the market bottomed this year and has been rallying ever since. Again, you remember, I was long at that low. And then we have support, and that is a sell signal. That's a break of support. Now, I suspect they'll probably at some point in the day try to make it look like it's going to recover or even maybe recover it. It's really hard to say because it's a clear breakdown right now. Usually when you get these breakdowns, a lot of the time they'll try to make it look like it's going to recover and then it'll sell off into the close. But I have to take the sell signal for what it's worth as of right now, and that is a breakdown. So unless they can ramp that up, and that would be a rally of about 4%. So pretty much negating the drop today to recover that trend line. If they do that, then yeah, it's a bear trap. But as of right now, with all the other signs, it does look like this is the real deal from a sell signal. We have negative divergence in place, so. And then Nvidia, you can see, back within this range that I've talked about. This thing was range bound for a while. It broke out, but we're back within the range. So it is good support right here at about 184.50, and we're below it now. But if dip buyers can step in and hold that support, then this could just be a pullback to support, and then you could go on to rally. So don't want to get too sold on the short side because obviously things can change throughout the day and we'll see how we close. But as of right now, it's broken down. So that tells me if that breakdown can stick, we're going to head down to the bottom of the range, about 164.35. And the way I'm leaning right now is the selling actually will accelerate into the close. We might kind of chop around midday for a little while, a couple hours, but I am thinking the selling is actually going to accelerate into the close. Next week, we'll probably have maybe some pretty impulsive selling, and maybe get down to some near-term bottom in the short term. Apple holding relative strength today. All the mag 8s, it's basically an AI. What we're seeing is an AI unwinding, or at least AI profit taking. Apple's never really participated in the AI trade for the most part, so that's why it's not really being sold. But the AI names are getting smoked, and that is, there's an unwinding there that I think will likely continue. So there's Apple holding bullish trend still, strongest of the bunch. But you can see something like Meta basically imploding. The bulls, I talked about this big gap down here. All these longs here, they're all well underwater, and they'll become panic sellers as this thing continues. If they bought Meta here, then they're going to be, they're going to unwind those positions as it continues to go down. So hitting some support, it looks like here where there's a gap to fill. I've got that kind of marked out, so could be a near-term bottom there in Meta. Palantir obviously been in the news with the battle of the CEO and Michael Burry, who's a prominent short seller. Yeah, I don't know. I mean, it's broken trend. So at the end of the day, we have a sell signal. You have an uptrend here to follow, bearish engulfing. Or not a bearish engulfing, a bearish rising wedge there that it's been making on the daily chart. Clean negative divergence confirmed recently, and just momentum just dropping off. And you have a sell signal, a break of trend yesterday. Big old sell signal candle break of trend, hitting some support here. There is support at about 171.38, so I could see a bounce here. That would make sense for sure. But this is a hot trade. You know, you've got a lot of longs loaded up on this thing, and I think this thing's just starting, so I wouldn't put too much faith in a bounce. Yeah, you could get a bounce or a backtest of the trend line, but with the unwinding that we're seeing across the board in the AI trade, and this is one of those kind of momentum trades, I lean towards not much of a bounce here and just a slice right through, and then and a move pretty much straight down to the 200-day moving averages, and there is some support down here at 128.41. So I think you probably can slice through the 200s and then bounce. But yeah, this one looks good. The projected target, if you are interested, you take the widest part of the wedge here, and that will give you kind of an idea of where this is, likely to head. And it's all the way down here at 88.22. All right, and that is a drop from where we're at right now of about 50%. So that is the projected target. That's kind of my outlook for this thing, is to move down there. Shop, again, I'm covering this one. It's got a sell signal. It had a sell signal yesterday. So on this one, bearish rising wedge, negative divergence. It's just the same setup basically, but there's your wedge. So signaling that we're likely going to get a trend reversal. And you broke trend yesterday. So there's your daily close below the wedge. That's a sell signal, gapping down today and selling off pretty impulsively, down 5%. So this one is, again, a lot of hot air in these trades. I don't see much of support, honestly, until we, like this gap fill in 200-day moving average, 129.75 looks good to me. So that is a move down of about 12 to 13%. Before, and you do have this gap entry, so this is where they'll probably try to at least take a pause. I don't know if we're going to bounce, but I'd say take a pause, and that's about 145-ish. So that's what I've got, 145, and then, maybe hold there for a few days. Minor kind of, maybe a bull flag or a bear flag. You might kind of barely try to bounce and then roll over down to the 200s. So that one looks good from a swing trade perspective. Hood, again, another one that's broken trend, bearish rising wedge. You've got a large bearish rising wedge on that one. So I'm still projecting this one down to this blue trend line. That's the longer term support. All right, that's my target. So I like this level right here at 67.36 when it's all said and done. And we're trending lower. Can't say quite yet. We do have lower highs. Don't really have a lower low. So you got to make a lower low to say it's an actual downtrend. But in general, the wedge is broken. Momentum has been broken. And we are not able to make a new high, down near the lows. Looks good from my perspective for continued downside. There's some support here at 117.30. You take that out, you head down to the next level of support about 95.75 and the 200s. So that's good support down there. You probably have to battle it out there for a while. They're not going to just the bulls aren't just going to give up the 200s easily. They're going to make a stand and try to hold the 200s. And you can see this, rolling back this stock, you can see, look, there's where you recover the 200s. Boom. There's the 200s. They bought it. There's the 200s. They bought it. Got close. They bought that. There's the 200s. They bought that. So they're going to buy the 200s at least for a bounce. All right. I would expect at least a bounce. But down to that level, 95-ish looks on par. Flipping over to the S&P 500 heat map, you can see it's a clear risk-off day today. So their defensive names are holding up in general, but all the momentum names are unwinding. Financials also look weak. So risk-off. But the problem is that the market weighting the market's all about AI. It's all basically large cap tech stocks and the AI trade. When that unwinds, it's just too much. The weighting is too high that it's going to drag the rest of the market down with it. So, just the name of the game when you chase kind of hype. Here's Oracle, kind of an example of it, but you'll see here Oracle came out with this AI pump news on their earnings report here, and this thing gapped up massively. It gapped up, at one point it was up 40% in a single day. So if you bought that hype news, you're now down 30% on that trade. All right. So it's basically lower from where it actually pumped up. They've given all of that back. So that has been an opportunity. That is when they pump things like that, the institutions unload into that strength. All right. And that's what's been going on there. So that's why it doesn't usually make sense to chase a move. Okay. I don't have much else. So I'm going to go ahead and get the video out, keep looking for stuff. But yeah, we are seeing that AI trade unwind. So looking for that to continue. There's a lot of momentum there. There's a lot of hot air in that trade. That's a very, very crowded trade. It's basically the only trade for the most part that's worked this year, that and gold. So looking for that to unwind.